Alright guys, in today's video I wanted to have a bit of a chat about fundamental analysis. Just a few quick points that I think will really help you out. Because I can tell from the different emails I receive and the different view counts on certain types of videos that this seems to be an area that some of you are really neglecting or have no interest in, or are just seeing as an area of weakness for yourselves so you don't like to dwell on it. But I think that you're really sort of missing out if you don't include fundamental analysis in your trading. When I look back at my own trading, some of the biggest moves that I've been able to pick up on have been because I was combining fundamental analysis with my technical analysis. But I can sort of understand why people neglect it, because when we compare it to technical analysis, the technicals just seem so much easier to learn. They seem more formulaic. It seems like there's sort of a rule book in some ways. Like you just have to learn a few different tools, master them, and you can use them to understand the context of the price movements and then profit from it. Now, obviously, when you start to learn technical analysis, you soon realize it's not so straightforward as that, and you need to understand a lot more about the context of what you're seeing. And over time, people soon start to realize as well that it really helps to build that fundamental picture. But the problem with fundamentals is that a lot of the time it sort of feels like, where do you even start? There's so many things that we could cover that it's very difficult to see a very clear plan to learning how to do fundamental analysis, especially for things that include macroeconomic factors very strongly, like Forex or bonds or commodities, things like that. And people ask me how I learned to do fundamental analysis. And the truth is, although I can answer that question, basically I got a degree, I read everything I could get my hands on, made tons of mistakes and basically made predictions that never came true and learned from that and built on it. I don't think that's necessarily the most efficient or the most productive way to learn. So I can give that answer, but I don't think it's the best answer to give. So then people ask, well, what books can I read that will help me learn fundamental analysis? And again, there are certain books you can read that are going to improve things for you. And we've been trying to put out a lot more videos this year about fundamental analysis, like a series on monetary systems, a series on the history of the financial markets, and so on, like trying to incorporate that fundamental view into your thinking. But at the end of the day, there's so many different factors that we have to consider that it's very difficult to understand from just one book or one course or one anything how we do fundamental analysis. So instead, we need to think about it in a more practical way. And I think the best way to improve your fundamental analysis or to actually learn how to do it is to actually just get started. I think with most things when it comes to analysis, you get better by practicing, seeing where you went wrong, incorporating different angles into your analysis, and you just progress. It's like one step at a time. And it's no different with fundamental analysis. You don't need an economics degree from day one to start doing fundamental analysis. You just have to have an opinion that you can build on. Now, the problem with the fundamentals as compared to like technicals is that it feels like they're not measurable. Like you can't measure if you're getting better. With the technical analysis, it sort of feels, like I said, it feels a lot more formulaic and you can measure what's happening. You can see whether the price did interact with the tools that you laid out on the chart and whether they actually predicted what was going to happen correctly or not. But with fundamentals, things seem a lot more vague. And in fact, people don't do themselves any favors when they are vague about their predictions, especially when they then claim that their predictions were right. For example, if we talk about the stock market and people say it's due a correction soon, which to be fair, I have said a lot as well, like when is soon? Is soon in a week, a month, a year, 2 years, 10 years? How soon is soon? And what's a correction? Is that 10%, 20%? Is it a full-on crash like 40%? Or is it just 5%? So the only way we can improve is by getting more precise and actually giving ourselves something that's measurable. And in addition to that, we need to start to read up on loads of different things that are going to give us different angles. I don't necessarily think that you need to start, going to the library and reading tons of books. Of course, that will help. But I think you can also help yourself by understanding how other people gain their views. Rather than having these polar views that we seem to have a lot these days, like for example, people that are pro-Trump and anti-Trump and they can't sort of agree on anything in between, we need to take in different angles and establish like a full-on analysis, like a 360 view of a topic. And the only way to do that is to look at other people's analysis, see where they're coming from, go down the rabbit hole down that end and start to see what we can build onto that. So for example, a resource that I use a lot is seekingalpha.com. I've spoken about it before. Now here, it's not necessarily professional investors, it's just people that have an opinion. Now, of course, you can value some people's opinions over others, but it's very interesting to see what different angles people come from for the same topic, and sometimes having completely different conclusions. But you can take different points from each angle, study it, research it, go down that route, study other things, and really come to your own conclusion. Now, this brings me on to a resource that I wanted to introduce you to. I'm in no way affiliated with it. I'm not sponsored by it. In fact, it's a free resource. I've never even been in contact with the people. But basically, last week when we were talking about probabilities, and I was talking about probabilities of your technical analysis, I referred to the work of Philip Tetlock. This is a guy whose work I really respect. And he was part of a group that founded a project called the Good Judgment Project. Now, the Good Judgment Project has a website where they post different questions from different sort of institutes. For example, they have one where they're asking questions about the economy, one where it's asking about politics, one for science, and so on. And basically, you're meant to make a judgment about what's going to happen. You assign a certain probability to whatever the question is, and then you can score yourself over time and see if you can improve. So they score your predictions on something called the Brier score, and this allows you to have something measurable, so over time you can start to tighten up that score and get better and better. And at the same time, you can understand after the fact what you did with your prediction, whether it was right, whether there was something else that you were missing, whether there's a different route you can go down. You can learn different techniques for understanding a situation and for breaking it down to try and make a prediction out of it. And I think this is really helpful. For example, one of the questions that they have on their website is about the FOMC and what decision they'll make with interest rates in December. Now, I think a lot of people just assume that interest rates are probably going to be rising in December, but they can't necessarily give a 360 view of why that's the case. But if you can build that view in certain situations about specific topics, you can start to invest based on that or trade based on it and make profit. For example, if you can really look into whether the S&P 500 is going to correct by 20%, which is another question on there, in 2017, and you come to the conclusion that it will, based on whatever research you did, and by the way, that's not my judgment at all, then you can, of course, profit from that movement. You don't need technical analysis at that point. Your technical analysis can be a useful extra factor in doing your analysis, but you just, over time, you can start to see if your judgments were right. You can incorporate other thinking after the fact. If you realize you missed something, you can look at what other people's predictions are. You can discuss it with them and see if there's anything you're missing from your overall view. And slowly over time, you're going to get better. You're going to understand more. You're going to learn more different concepts you didn't ever think you were going to learn or didn't ever think were relevant. And then you can start profiting from it and really start to pick up on things before they take place. So I definitely recommend signing up. As I said, it's free. The link's in the description box. We're not connected in any way to it. But even if you only use it like once a month to make some predictions, or only just have a look through the sort of other forecasts that other people have said to start to understand the thought process, I still think this could be really beneficial for you. And over time, as you get better and you see your score getting better, you can suddenly start investing. When you think there's a 80% chance of something happening, you can start to think where the investment opportunities are based on that. This is essentially what we're doing when we build a fundamental analysis. We're looking at specific situations, asking ourselves a question, and then trying to figure out the probability based on that. And then if the probability is good enough, we can open a trade based on it. So this is something I want to incorporate more on this channel as well. It's discussing different topics and how you sort of go through the facts and understand what the situation is. We're going to be doing a lot more of this on the forum for our members as well. So if you remember, check that out. We'll probably launch that in a week or two. So there you have it. I just wanted to talk through that because I wanted to get some people on the right track. And I think doing something like this that's measurable and something that you can reflect on is something that's going to really unlock that way of thinking for a lot of people. So anyway, I've chatted enough for now. If you like this video, hit the thumbs up. If you've got any questions, leave them below. And don't forget to subscribe so you can be on top of all the videos that we're going to be releasing that will help you out with fundamental analysis and technical analysis and a lot of other things as well. Take care, guys. Bye-bye.